Hello traders, and welcome to a video about how to correctly identify support and resistance lines. Now these can always be seen as a bit subjective, so I'm going to show everybody a few tips that we use at FX Evolution to basically break down charts and to correctly identify these lines as good as possible. We're going to be using horizontal support resistance lines today, and we're going to actually start with a top-down analysis. So let's get started. Okay, here we have a weekly chart, and even if you're trading, let's say a 1 hour or 15-minute chart, you should actually pretty much start here. And what we like to do is we actually like to switch to a line chart, which is not that common when it comes to trading Forex or trading any instrument. Most people don't use line charts, but the big guys do use line charts. So we go down from the weekly because we didn't see anything that key, and then we can see here on the daily that there was a point over here where there was a lot of consolidation. And this is what I want to highlight right now. So what I like to do is I like to draw a line at the bottom of that consolidation, horizontal, and a line at the top. We can notice that the closes, because the line chart is the closes, is the most clear at the resistance. This was a beautiful close point resistance, and we've got that nice touch here with a few other touches, and we can assume there's probably going to be some candle kind of action there. So then we move over to candles and we start to look, and we might just do a little bit of readjustment to get our lines, horizontal lines, in line with the bodies of the candles, so the close points. Now, once we've done this, we might even want to take it down to another time frame, so let's say the 4 hour in this case, and we want to see how the market has interacted with these zones. Again, focusing on close points. So we've got that nice close point up here, closes here. Now, the reason we want to do this is because if we can get a very similar horizontal line in terms of our resistance and support on this time frame, we can use this time frame as our confirmation instead of using the daily as confirmation for the breakthrough. I'm just going to highlight the zones that we're looking at. We're obviously looking at this resistance zone, and we're looking at this support zone. So we've basically broken down these candles, and we've said, okay, the 4 hour definitely looks quite good. We can also go down to a 1 hour if we want to. And because this is basically a range bound market, we can see whether a 1 hour would make as much sense. It probably wouldn't, because we're not really seeing the whole pattern on our one fairly zoomed out chart. So it'd be better to go on the 4 hour for this one in terms of waiting for confirmation. Now, this is quite a simple one. We've easily identified the range bound market, the support resistance, and this is the candle confirmation. It's very clear that this one broke through our support level, confirmed the close, and at this point we could place our short positions in the market. So basically very, very clear on the New Zealand yen. But what happens when it gets a little bit harder? So we've got actually another one, the New Zealand yen, I just noticed at the start of this video, and that's over here. We've got many wicks, and we've got some beautiful bodies. Again, very tight kind of range. Again, it's a channel pattern with support resistance. Now, if we zoom in over here, have a look at it, what becomes clear is we've got some nice bodies up here, and we do want to focus on the bodies the most when we're drawing our support resistance. The reason we want to focus on the bodies is because the bodies are the close price. Think of each candle as a war between the buyers and the sellers. Effectively, at the end of that time period, the war has ended, and that is locked in time. Sometimes wicks, and we'll see this in a later example, can be there for an unknown reason or massive news, or it can be a point in illiquidity, all sorts of things. So you want to, if you ever see a big wick, you'd like to go and check out the news on that day, because that may not be that important for your support resistance zones. However, here we have the body closes, and we can see nice body closes all the way through here. We do have a bit of a rule. So when we see the close here, technically you could think, okay, well, the body has closed above and these are all weak points. Could we get into the market? I would say in this case, no, because it's not clearly broken by a nice percentage. You want to see the market very clear so that you can go back, if you were doing analysis and let's say showing a friend and saying, like, this is why I got into the trade, you would be able to say to that person, this is why I got in. They could see the reason as well. If the reason is not clear to them, let's say in that analysis, then the reason is not good enough for you to be in the trade. You have to think of it as, if I was placing $1 million, would I place $1 million on that kind of confirmation? Probably not. But this candle, absolutely. It's confirmed we're above the previous peaks, and absolutely that is a perfect point. So our resistance at the bodies, however, this break was not big enough. If it was like this big and then broken above, then we absolutely would be looking at that buy. But in this case, it's the next one. So this particular candle here is the confirmation, and we're very happy with that. So very easy support resistance, again, very similar pattern. So what happens on a period of time where we've got some wicks? What do we focus on? Do we continue to focus on the body for our support resistance? Well, I think there's no better probable example than this Euro US dollar weekly. So let's go over to the Euro US dollar. And I remember this one very clearly because there was a couple of things that were happening. One thing was this news, this wick, could have been quite ignored, because what happened is, again, we're on the weekly here, but it could be any time frame. What happened was there was a massive spike in news that instantly reversed. So therefore, you can pretty much ignore this when you're drawing your support resistance. But what you can't ignore is that there's a spike through here, more importantly, a body through this point. This point was again respected here and here. And then, of course, what we do see is that if we broke this down to a daily time frame, we would not be seeing this kind of wick here. In the day, it had broken through and then reversed, and therefore we basically don't want to be using that time frame as our confirmation. Remember, at this point where, let's say, we were looking at the market, whether we want to buy it or not. Resistance, very clear through this point. We need to see our weekly close above this point before we would even consider going long, let's say, against on the Euro US dollar. And you can see it very quickly reversed and came back down. So when you're drawing support resistance, there are a few things I guess you want to be doing. Firstly, you want to always use the top-down approach. Come from the largest time frame, especially on the weekly and daily, and use a line chart at that point. Then we can move over to, let's say, a candle chart, and we can start to break down each time frame, and we work into which is the best time frame for that support resistance with the clearest bodies all in a line. So if we have multiple resistance points, where are the body points? Then we sometimes want to look at a point of consolidation before the break. So sometimes what you'll see is you'll see the market effectively consolidate just before the break. So there's an example over here on the Euro US dollar recently, where effectively we had two support lines. Again, the body is here, so we've drawn the body at this point. Then we've got market coming down, finding support at this level, which again, we could have drawn very easily at this point over here because we're focusing on that body close. The resistance, the support basically happens, the market moves up, and then it comes through. Now, very clearly to everybody, this is the confirmation candle because it's slightly lower than that wick. But this could even be of shorter. If this was even shorter, it would still be fine. And that's because we're seeing that this is the clear point of support by doing very good analysis and focusing on that close candle. But more importantly, the market consolidated just before. All the bodies were just above. And often what will happen is that a market will wind or coil up just before the break of a support resistance line. So if you're seeing a coil just before the break, that's even more important, and it shows that you've probably identified your support resistance very well. Second kind of tip, of course, wait for confirmation. Always wait for that close candle of your support resistance. And third tip would be use that clearest time frame. So go up and down through the time frames. Not enough traders do this when analyzing support resistance, and you will have definitely a better look at the market and you'll understand the market better. So hopefully that helps everybody today, and we'll definitely see you next Monday for another trading tip.